I am going to be talking about order block in this video. Things I'm going to be covering are what is an order block, how is it formed, and more importantly, how one needs to be aware of the broader context while using order block in their trading. So let's get into it. At a very conceptual level, order block is change in state of delivery of price. So let's look into the change in state for both bullish and bearish order blocks. For a bullish order block, when the high of the lowest down candle is traded through by a later formed candle, a bullish order block is formed. Let's say that this is an established institutional support level. Now the price is trading towards it and it actually gets the support near this level, right? So this is the last down close candle. If you look at the next candle, this next candle closes above the high of the last down close candle. Once this happens, this particular last down close candle forms a validated bullish order block, right? So this is how an order block is formed. In this scenario, a bullish order block. Now let's look at the next candle. Now the next candle is, in this case, is a big green candle or a bullish candle. So if we look at the price action so far of these candles collectively, what you can think, right, is that when the price was coming towards the support level, the state of delivery was bearish. But once this candle closes above the high of this last down close candle, order block was formed. Now what happened, right? When the close happened here, the change of state of delivery became bullish from bearish. In other words, there were a lot of buyers who were ready to buy in at this level, and that sort of resulted in the change in state of delivery. Now that was followed by another big bullish candle. Now let's see what happens next, right? So in this scenario, a big bearish candle again was formed, right? A red candle. Now because this is a validated order block, what would you expect the next candle to be? Because this is a bullish order block, you would expect again the buyers coming in just like they did here at this support level, right, near the support level, to push the price come again, and that what happens, right, and the price goes up. So this is really the sort of change of state of delivery right here, followed by a typical price action that we see. Okay, so this is a bullish order block. Now let's look at a bearish order block. Very similar, but just the opposite. Let's say that this is an established institutional resistance level, okay, and then the price, let's say, is trading to the resistance level. Now once this particular candle is closed where below the low of this last up close candle, an order block is formed, right? And what kind of order block? A bearish order block. So this last up close candle becomes the bearish order block. Now let's see the next candle, right? A quick price action downside, right, followed by another candle which is trading to this validated order block. And once that happens, you would expect the same sellers that came here right at this resistance level to come back again, and that is a typical price action. So this is an example of a bearish order block. Now let's look at the institutional reference point in an order block. So if this is an order block right here, these are all four quadrants. So let's say the order block starts from here. So this is 0, 25%, 50%, 75%, and 100%. And what you will see in examples that I'm going to be talking about, that generally the price would react from any of these points. It can react from any of these points or quadrants, but specifically the midpoint, which is the 50%. So this is something that you got to keep in mind as we now get into few examples. Let's look at the first example. This is an NQ1R chart. Whenever we look at an order block, we are always looking for the right context to use the order block, as I said earlier, right? So now what's the context in this price action? If you look at the price action from here to here, this is the premium area, this is the discount area, and this is the equilibrium, right? Now this is the first fair value gap, or a bullish fair value gap, I would say, in the discount area. So let's say if the price has to retrace back, we would look at potential support from this area, right? So now let's play back next few candles, right? And you know, we are waiting for, okay, now if you look at this particular price action, this particular candle wicked into the first discount fair value gap and then moved higher, right? Moved higher up. So, which means that this is a support that can be trusted. Now, obviously, a lot would be determined by the price action that we see here. Okay. Now, I want to draw your attention to this close candle right here, down close candle, right? So think about it in terms of order block. If the price goes higher and closes above the high of this particular down close candle, this becomes a bullish order block. So now, can we trust that order block? Yes, it should be a high probable order block. Why? Because we have the context, right? We have a dealing range low to the dealing range high, price traded back to discount, a bearish fair value, a bullish fair value gap, got support from there, and now this is where the price is trading, right? So let's fast forward and see if the candle is closing above that. Okay, right here. With the close of this particular candle, right, up close candle, green candle, this particular area, or this particular candle from high to low becomes a bullish order block, right? Now you can actually technically pretty much look at the high to the low of the candle to be an order block, but also what you will see is many a times the candle, the body of the candle is where you will see the maximum reaction. Okay, so if I just consider the entire candle, this becomes the order block, and you see this area. So what we can expect is, if the price trades to this order block, we should see a reaction, right, from this area, anywhere in this area, to be bullish and taking this liquidity out. All right, now let's fast forward it and let's see if the price is trading to this order block. Okay, here, so the price traded to this order block right here, got the reaction that we were looking for, and took the prior liquidity here out, right? This was the lowest hanging fruit. It took this liquidity out. So, this is really the first example. Now, let me also then draw your attention to another sort of an order block here that we should be aware of. With this close of this candle, right? This particular candle right here, this green candle, pay your attention to the series of this down close candle. Okay, series of this down close candle right here, because this particular candle closed above the high of this series of this down close candle, this entire area becomes another bullish order block. Okay, so now let's draw this order block right here, because there are no up close candle and this is all a continuous down close candle. This entire area is an order block. All right, now you see, where are we getting the reaction from? This particular candle close validated this order block. Now we came back to this order block right here, and now we are seeing a reaction. So if we fast forward it, right, now we see this reaction from it, right? So what we saw in this entire exercise, that if we had the right context of the dealing range of a support from, let's say, a discount fair value gap in this case, then we can really frame our trades around these order blocks, right? Because these order blocks in that scenario become high probable. Okay, so this is the first example. Now let's look at our second example. This is a NQ 4-hour chart, and if you look at this one, NQ at this point in time is trading lower, and when it's trading here, we don't know to how much it's gonna come. Would it take this liquidity and or this liquidity as well, right? So let's fast forward, see how the price action develops. All right, now took this liquidity out, still trading here. Okay, let's fast forward more. All right, now took this liquidity as well. Now you never know, I mean, if the price action is really bearish, it can even take this price in liquidity as well. So that's why we have to wait, and we have to wait for what? The order block, the first order block on a 4-hour. Let's say if we are trading on this chart or getting cues from this chart for our intraday trades as well, we are waiting. What we are waiting for? We are waiting for the order block to be formed. And if we are waiting for a reversal, we would wait for a bullish order block to form, right? So let's fast forward, and this is price action. Here you go. So now if you look at it, do you see a bullish order block forming? And I would say yeah. So it took this liquidity out, right, came all the way here, started to reverse, and now pay your attention to these two closed candles. Okay, now technically from high to low is the order block, but as I said, a lot of time you will see the reaction from the body, right, from the body basically of these down close candles in this scenario. So if I draw an order block from here to here, right, just taking the bodies of these two consecutive down close candles, they became an order block. And let's see, so now the price has traded higher. Now after this candle close, this become a validated order block. Now if the price comes back here, now obviously there's no guarantees, right? Sometimes you will see that there is an order block but the price will never come back, right? It will just keep on going, right? But if the price comes back in this area, it should get a bullish reaction here in this direction. Now again, I've talked about the basically the context or the narrative. Now what is the narrative? The narrative is that we saw a lot of selling, we saw it taking some key levels of liquidity, and we saw the price reversing from here, right, forming an order block. So now this becomes a high probable order block, right? Now let's fast forward, see if the price is coming. All right, now if you really look at it, the price came back to pretty much the very close to the midpoint, right? Just traded through the midpoint by maybe few ticks lower, and then let's see what the reaction is here. And here you go. So you see, this became an order block, right? I mean, this is an order block, and we see the reaction out of it, right? So now obviously if you are, let's say, intraday trader, right, you're not going to trade just based on that. But what I use these higher time frames, specifically an order block, for example, is to frame my trades even on intraday basis, because if the higher time frame is aligned, then there's a lot more probability of success for your intraday trades as well, right? And we're going to talk about a few examples later in subsequent videos in terms of how you want to integrate all of this, right? But you're getting hopefully the idea in terms of how this order block is being formed and respected, right? So this is this is how you frame. And then if you look at the action here, the price may come back in this order block, and the order block can be used, can still be providing the required support to push the price higher, right? But always remember, just like with any support resistance theory, right? The first time reaction is really the most probable one, right? It can react few times, right? But I'm saying that in my trading, I always trust on my first reaction. Now, if it comes here, it may very well again reverse, but the probability of the reversal here would be definitely lower than the first one. So always remember that. But anyways, let's just look at what the price does here, right? And if you look at it, the price traded back to the second time reaction, third time, and then another reaction. So it can, but always remember the first time is really where the best trade opportunities are available. Now let's look at a third example. This is a daily NQ chart, okay? And if you look at the price action till here, so if we establish a dealing range from this low, right, for this swing low to high, it's traded to the discount area, right? And discount is where the smart money would buy to push the price higher. Now, so this is a potential reversal point, right? Let's also look at where the fair value gaps are, right, and the discount. So this is the first fair value gap, and let me just color it in a different color so we are clear as to what we're doing here, right? So this is the first fair value gap, and if I play it higher, so you see a couple of things here, right? Quite interesting. In this particular fair value gap, what you will also see is a bullish order block right here. This down close candle, right, from here to here, in fact this entire area is a bullish order block, isn't it? And so this is a bullish order block, right? And was this bullish order block tested at all? If you look at the price action here, the price never came back to it. So this is the first time the price is coming back to it. So there was this fair value gap, but then the price traded through this fair value gap to this order block, got that reaction, right? So this is a bullish example of this particular transaction, or this particular price fractal. Now we have another dealing range here, right? So if you look at this high of the dealing range to the low of the dealing range, this is the equilibrium right here. And what you see around the equilibrium here, you see an up close candle, right? Now this is really the order block right here. What kind of order block is this? A bearish order block, isn't it? And this is right in this equilibrium area. So you would see should see some kind of reaction out of this area, right? And if I fast forward, you see this was the reaction, the first reaction out of this order block. And I have this. So if you really look at this first reaction, the price trades to this order block, right here, just got to the premium. So high to low to the premium, and then from premium we see this big reaction, right, from this order block. So this is a bearish order block example. So hope these examples help to reinforce the concept of order blocks.